UK and European shares gained as British inflation fell below 8% for the first time in more than a year, boosting sentiment. And the Consumer Prices Index in the UK was 7.9% higher than a year ago in June, a sharp drop from the 8.7% reading in May. The Office for National Statistics said Wednesday economists had expected a decline to 8.2%. The FTSE 100 index advanced 1.4% as of 10:55 a.m. in London, following the inflation data, which revived speculation about how many more rate hikes the Bank of England will deliver to contain prices. The more domestically focused FTSE 250 index rose 3.1%, the most in almost 6 months. Across Europe, the Stoxx 600 index was 0.5% higher, with the real estate and consumer stocks outperforming, while basic resources and media declined. As rates traders parred bets on further interest rate hikes by the Bank of England, UK home builders rallied. The FTSE 350 household goods and construction index jumped as much as 7.2%, the most since 2008. Leading gainers included builders, Redrow up 9.3%, Crest Nicholson up 8.4%, and Persimmon up 8.0%. The strength in the pound was due to higher inflation, pushing rates expectations up, growth expectations down, said Barclays strategist Emmanuel Cao. So today's weaker than expected inflation. Print is arguably a relief, which should lift sentiment on the depressed domestic plays and rates plays. Investors are very bearish on UK and underexposed, so short covering. This same however, while inflation is coming down, the Bank of England is lagging other major central banks, including the Federal Reserve and European Central Bank, in bringing it under control. Further policy timing still risks sending the UK economy into a recession. In the euro area, underlying inflation accelerated more than initially reported in June, cementing the European Central Bank interest rate increase widely expected next week. Core consumer prices rose 5.5% from a year earlier, compared with a preliminary estimate of 5.4% and a reading of 5.3% in May. ASML Holding NV gained 0.5% after the semiconductor company said orders rose in the second quarter, prompting it to raise guidance. Rio Tinto Group dropped 0.6% as the world's biggest iron ore producer, said second quarter shipments of iron ore fell 1% from a year earlier. And markets in Europe are having a slower start of July after advancing in the first half of the year, with investors weighing economic growth and central banks' monetary policies. While earnings season has kicked off on a positive note, corporates' results should be a positive catalyst for equities, which could see another leg up, but we remain underweight on stocks as valuations have gone too high, said Megan Angelico, Chief of Investment Officer at Creand AM. We see a mild recession ahead. While markets are not pricing in any of it, central banks will stick to their message as inflation remains uncontrollably high. For more on equity markets. Inflation can't slow fast enough for UK equities taking stock. M&A Watch Europe, Covestro, ADNOC, National Grid, Nordea Argings, and Novartis pursues Sandoz spinoff as IPOs languish. ECM Watch, U.S. stock futures unchanged. Aqua Metals, Amarin fall.